Good morning, everybody. As Lori said, my name is Sai Scott, co-founder and CEO of Headset. We're a data and analytics company that really helps organizations make better decisions through the data that we have access to, and that is primarily retail measurement data, which means that we get data from dispensary, retailer partners via their point of sale. We also get data through online sources as well, and it really tells an exciting picture of what's going on in the market. Sometimes exciting, sometimes not particularly exciting. For this presentation, I wanted to look a bit at a relatively recent cannabis consumer retention study we did. It's the largest consumer retention study that we know of, and kind of where the market is today and what the consumer looks like. The study incorporated over 1 million consumers, over 1,000 stores in our data set. And the big headline is pretty gruesome. It's not the most exciting thing to look at, but I think the takeaway here is pretty important, pretty powerful, and a pretty big opportunity for a lot of organizations. So imagine you're a coffee shop, imagine you're a gym, a restaurant, a barber shop, anything, right? And imagine if 2 out of your 3 first-time customers never came back. I mean, that'd be a serious problem, right? Serious problem for any business, and you'd really work hard to understand what is going on, why is this happening, and cannabis just calls that normal. We've been doing this for over 10 years in adult use, and we've been seeing this trend for a long time, and it's just somewhat accepted. And we're going to show you the data that kind of is driving a lot of this behavior and what you could potentially do about it. So big picture, macro view, where we're at right now in cannabis is that the market has stopped growing. And generally we've had really good tailwinds from new markets. And there are states out there that are doing really well. You'll see Ohio numbers, you'll see New York numbers. But on the flip side, you'll see numbers like California in 2025, the largest market, down 7%, right, which drags the top line down a bit. Now, 2026 we think is going to improve. We think obviously rescheduling will have a net positive impact, but so far, May 2026 versus May 2025, it's flat in the markets that we track. So it really begs the question, you know, how do you succeed? How do you continue to expand in a market that isn't growing the same way we're used to it growing? And this is the headline. 67% of cannabis consumers are first-time visitors and they don't come back. So 2 in 3 are gone within 6 months. And for our study, we looked at 1,060 stores over 9 states in a 6-month window. So after 6 months, 2 out of 3 were gone. And the question here isn't so much like, why is this a bad thing? Because when you look at the quality of the repeat customer and the caliber of their spend, the repeat customer is the fortune, right? Repeat customer is almost 6x of a one-time customer. When they do shop, it's not that they're buying different things. When you have a repeat customer, they're buying very, very similar items, but they're just coming back more times. And that frequency is driving up the total dollar to almost 6x that one-time customer. And the real problem is that your acquisition costs are paid either way. That 2 customers walk in, one's a first-time customer, one's going to be a repeat customer. You paid the exact same amount for that customer, right? So it's really important to focus on the bigger spender, the returning customer. And so you might say, well, I'm just going to target a better consumer, you know, someone that will be a returning customer. But our data shows on the demographic side and the basket side that the consumer looks very similar, no matter they're a one-time buyer or if they're a repeat purchaser. They're almost identical. So it's not that you can just go after, you know, a specific segment of the consumer to change that. You might say, well, in my market, this is just the way it is, and it's just tough. But when we look across all the stores, out of our data set, the bottom 20 stores really only retained 5% of their customers, and the top 20 stores retained almost 70% of their customers. So kind of inverse, right? So over 2 out of 3 do stay. So you can fit somewhere in here, and something is working for a lot of these different groups here. And on a state level, it does vary. You know, we're looking at averages across an entire market, but at a state level, Michigan actually has the best rate. with 58.4%, where New York, Massachusetts are some of the toughest at 76.4% loss. So what does that first-time customer look like? Well, it's really about understanding that discounting works, and bringing discounts or having discounts will bring people in. And we see a 10% increase from 27 to 37% if there is a first visit discount. So discounting does work, right? And discounting, I think we can have a whole conference on discounting and pricing in cannabis, but discounting does work. The paradox here is that the deeper the discount, the less the customer is worth. So if you're acquiring a customer with a small discount, it's going to be worth significantly more than if you're acquiring a customer with a larger discount. The big, deep discount consumers are really deal chasers, right? They're looking for the next thing, and you're training them to look for that half off, which we do see in the data quite a bit. So really being mindful of your discounting strategy when it comes to attracting those clients, because discounting is important. It's just a matter of how much do you discount. So we looked at 72,000 dispensary discounts published across the web last month. And it really does show that discounting is going backwards. The sweet spot really is 1 to 10% off for that first-time customer. As I mentioned, doesn't matter what the discount is, but if there's a discount, you're going to have a better customer. So, you don't want to go over 50%, which we see 1 in 4 baskets have an over 50% discount happening. And discounting continues to increase. We see 25% or 25 cents of every dollar is going to discounts. And a good way to think about discounts and a good way to think about deals is if a customer gives you $1, you're giving them 25 cents right there, right? It's essentially the same thing. And that continues to go up. And only 4% of the deals that we looked at, the 72,000 deals, targeted first-time customers. So weren't specific to those customers. So really looking at a smaller discount and looking at targeting those first-time customers is how you're going to drive a bit better retention. So what is the playbook here, right? So we've seen the best operators essentially run the same 3 plays. So the first play is just acknowledgement. So a new first-time customer comes in, really acknowledging, hey, you're here, thanks for coming, I hope it was a good experience. Maybe follow up with, some sort of promotion. Another play is to really understand what is driving the return signal. And every store is going to be different. Your customer profile, may look different than another store down the street, but what are your customers that are sticking around purchasing, and focusing on that when you're dealing with that customer engagement. And finally, sell the experience. We're in a market, many states, have some vertical integration, some have no vertical integration, and it's really hard to differentiate when you can go to another store down the way that sells the same thing, maybe at a deeper discount. So you really need to sell the experience, not just on the price, because on the price alone is what's driving a lot of this deal bouncing behavior. So running, these 3 plays, any combination of these plays, I think can really help set you up to move you from that 1 out of 3 becomes a retained customer, a repeat customer, to more of 2 out of 3, or hopefully 3 out of 3. And so right now, the land grab is over, right? We're still seeing, markets that are, haven't come online, right? Like Virginia is still delayed, Pennsylvania, we're still waiting. And generally, when those markets come on, it's great. It's tailwinds, it's new opportunities for operators, but many people, many in this room, I'm sure, are operating in very competitive markets right now that are dealing with this and dealing with retention. And whether you're a retailer, or whether you're a brand, an investor, this will impact you and how you think about your business. So it's really about understanding, who your customer is, looking at how you're bringing them into the store, and making sure that they continue to come back. So if this is helpful, we have a lot of data like this at Headset, and again, we really like to help organizations make better decisions when it comes to navigating the cannabis industry, and you can find us at headset.io. Thank you.